Hello guys, a very good morning to all of you. So guys, we're doing this chapter called as average due date, and in the previous class guys we completed case 2 bilateral transactions on those transactions. How do we calculate the average due date we saw, and guys then we did case 3 in case of repayment of installments. So in that case, how do we arrive at the average due date? That is what we have also seen. And today we'll be heading towards the last case guys, case number 4, where we learn to calculate the average due date for determining the interest on drawings. Guys, this interest on drawings somewhere we've studied. Can you tell me where exactly we've studied this?
Partnership, sir.
Which chapter of
Partnership.
partnership?
Fundamental.
Absolutely. Fundamentals of partnership, guys. If you see in that chapter, guys, we've learned 3 ways of calculating interest on drawing. First method is simple method, second is product method, and third is average period method. So guys, we use average period method when the date of drawings, that is the frequency and the date of drawing, plus the amount should be uniform, right? If at all you're drawing, let's say monthly first, every month first, which means date is also same and frequency between or the time gap between 2 months is also same. So these two conditions has to satisfy with regard to month, and amount also has to be uniform, guys. If we are drawing 1,000 rupees every month, it has to be 1,000. If these two conditions are getting satisfied, then I would say that you can use the average period method. But in this, any one condition is failing. That is, dates is every first of the month and the frequency is also monthly, but the amount is vary. You cannot use average period method. Or amount is matching, but month is 1st of April, 3rd of May, like that. Frequency and month is also changing. So if that fails, then you cannot apply the average period method. So if you cannot apply the average period method, guys, the balance 2 method that you can apply is simple method and product method. Simple method means what? For each and every uh, transaction of drawings, upon that you calculate the interest. You calculate the interest on each and every drawing. So the simple method becomes very time consuming because you have to apply the formula for each and every month of drawing. So to overcome this hurdle, we came with the concept of product method, right? In product method, what do? We multiply the number of months with the amount and get the total product. And upon that, we apply the interest on drawing concept. Now, in this chapter, guys, we are going to calculate the same interest of drawing from the point of view of average due date. Answer will be same, guys. Whether you do the simple method, product method, average period method, or using the average due date, the final interest will be the same, right? So let's understand how do we do this, guys. Illustration 11, guys. Illustration 11 of your study materials, which says that A and B are two partners of a firm, have drawn the following amounts of from the firm in the year ending 31st March 2020. So there are two partners, guys, A separately, B separately. So don't think this is a bilateral transaction. For A, separate tabular column. For B, separate tabular column. For A, separate base date. B, separate base date. This is not a bilateral transaction between A and B. It is a transaction between A and firm, B and firm. So both are separate. Both are separate. So whenever you see A and B, don't think to take common base date. Even though if you take common base date, answer will match, but don't do that. Further, the question says that interest at the rate of 6% per annum is charged on all drawings. So 6% is the interest on drawing, guys. Calculate interest chargeable by using the ordinary system, guys. Ordinary system is nothing but your simple method, product method, and average period method. And the same question they're asking us to calculate using the average due date method also. 1 year should be assumed as 365 days. So guys, can we do first the ordinary method? In the ordinary method, guys, please tell me which of the 3 method is applicable. That is simple, product, and average due date. Which of the 3 is applicable here? Is average due date applicable here? Is average due date, sorry, is average period method applicable here? In the ordinary system,
No, sir.
in the ordinary system, there are basically 3 ways of calculating interest on drawing. One is simple method, second is product method, third is average period method. Average period method cannot be applied here because one, amount is varying. So because of that, you're disqualified to use average period method. And further, guys, if you see date also, it is 1st July, 30th of September. It is in haphazard manner. So I cannot use the average period method. So having ruled out average period method, we are left with now simple method and product method. Simple method you can do, but it will be time consuming because for each and every transaction, you have to calculate the interest on drawing. So that is time consuming. So can we apply the product method, guys? Since the question is silent, can I apply the product method?
Yes,
Please
sir.
tell me.
Yes, sir.
Now, let's calculate the interest on drawing using the product method. So calculation of interest on drawing. We'll do separately first for A, guys. For A. So, guys, what will be the format? Can you please tell me? What will be the first column?
Date of withdrawal.
Date. Then
Number of months left.
number of
Months left.
normal. What is the format we learned in the partnership chapter? Date followed by amount. Then number of months. Now, guys, look at this very carefully. Here, if you see, if I talk about July, it is 1st of July or it is 30th of September. Either it is first or end of the month. So for me, month calculation becomes very easy in case of A. But in case of B, guys, he's withdrawing on 12th June, 11th August. So can you calculate number of months properly then for B? For A, if you see, either it is in the beginning of the month or end of the month. So for me, it is very easy to calculate number of months. But in case of B, guys, do you think that we'll be able to calculate the months properly?
No, sir.
Not possible. So can I say for B, we have to calculate in number of days. And for A, we have to calculate in number of months. For A also, you can calculate days, but days is actually time consuming process. So for A, we'll go for month. For B, we'll go in days. So guys, number of months. Number of months. Finally, product. Finally, product. Right? Now, guys, the date of drawing is 1st July, guys. 1st July. 1st July. This is the normal system what we have learned in the partnership, guys. We're doing the same method now. Second is 30th of September. 30th September. 1st November, 28th February. 1st November, 28th February. And what is the amount, guys? Amount is 500, 800, 1000, 400. 500, 800, 1000, and 400. Guys, please calculate number of months. Guys, number of months from where to where will you calculate? Can I say number of months from the date of drawing till the end of the year? Can we calculate, guys? What do you say? Because year ending is 31st March. Year ending is 31st March 2020. 2020. So can I say this is 19, 19, 19, and 19. So guys, from 1st July to 31st March 2020, guys, how many months? July, August, September, October, November, December, Jan, Feb, March. Can I say 9 months? Guys, it is 1st of July. So I should include July month also. Okay. Second case, guys, 30th of September amount is been drawn. So 30th of September is month end, guys. Ignore the September. Calculate from October. October, November, December, Jan, Feb, March. 6 months. 1st of November, guys. So I should include November. So November, December, Jan, Feb, March. 28th of February, guys. So ignore February. I'll take 1 month of March. Then now we have to calculate the product, guys. Product. 5 nines are 45. Can I say 4,500? You can use the calculator, guys. You can use the calculator. 500 into 9 m plus 800 into 6 m plus 1000 into 5 m plus 400 into 1 m plus and MRC. 14,700, guys. 14,700 is the total. Now tell me, guys, what is the formula for calculating interest on drawing? Interest on drawing for A is equal to, please tell me the formula, guys.
Product into
Total
rate
product, yes, into what is the rate of interest?
6%
6 by 100, then
into 1 by 12.
into 1 by 12. Guys, be very careful. 1 by 12 because we took months. If it was days, then we would have taken 365. So you have to be very careful. So what is the total product, guys? Total product? 14,700 is the total product. So 14,700 into 6 by 100 into 1 by 12. How much it is, guys? How much interest are you getting?
73.5.
73.5
5.
or 05? 14,700.
5, sir.
to 6% divided by 12. Okay, 73.5 is the answer. Right, guys? Approximation error can be there, so that can be ignored, not a problem. So guys, this is the calculation. So what is what we got in the here? Yeah, so 73.5. We've got it with the exact textbook answer because even they've used the month system. So it will be easy only. Now guys, we have to do the calculation of IOD for B. So again guys, same column, date, amount, then guys, number of months. I cannot use it guys because the dates are in between also. So calculating months will not be advisable. So number of days, and then product. So this might be a little bit time consuming, but no other options. So if I see guys, what is the number of days? Sorry, what are the date for B? It is 12th of June. So I can write 2019 here. So it will save time. So it is 12th of June, 12th of June, 11th August, 9th Feb, 11th August, 9th Feb, and 7th of March. Amount is 1,500, 400, 900. 1,500, 400, 900. Guys, now we have to calculate number of days, guys. So can I say from 12th June up to 31st of March, guys? So in June, totally 30 days are there. Minus 12 days. 12 days is gone. So 18 days, guys. For 18 days, the partner has enjoyed the money. 1,000 rupees is withdrawn on 12th of June. So 18 days in the month of June, partner B has enjoyed this 1,000 rupees for 18 days. So June 18 days, July 31, August 31, September 30, October 31, November 30, December 31, Jan 31, Feb 28, March 31. 292 days, guys. 292 days. Are you all getting it? 292
Yes,
days. Everybody, please calculate and tell me for the next one. Withdrawal is done on 11th of August, guys. So 31 minus 11. So
232.
232. So 500 rupees is enjoyed by B in the month of August for 20 days plus September, October, November, December, Jan, Feb, March. 232 days. And then guys, 400 rupees is enjoyed in February for how many days? 28 minus 9. So it is enjoyed for 19 days plus 31 days of March. So 50 days, guys.
Yes, sir.
And 900 rupees is withdrawn in the on 7th of March. So 31 minus 7. So B is enjoyed this 900 rupees for 24 days, guys. 24 days. Tell me the product. 1000 into 292 M plus 500 into 232 M plus 400 into 50 M plus 900 into 24 M plus MRC 4,49,600. 4,49,600. Yes, we've got product now. So let's apply the formula. Interest on drawing for B is equal to interest on drawing for B is equal to total product, which is 4,49,600 into 6 by 100 into 1 by 365, guys. You have to be very, very careful here. You got to be very, very careful here because you have not taken months, we have taken days. Guys, sometimes what happens is by default, the formula that is fixed in your mind is total product into ROD into 1 by 12. So there is every possibility that in your exam, you can, out of oversight, you can write it 1 by 12. But guys, you have to be very, very cautious. Presence of mind is very, very important. So now tell me guys, what is the interest?
73.9.
73.9. Is everybody getting?
Yes, sir.
So guys, this is the calculation of interest using the ordinary system. Yes, this is nothing new in this. The only new thing was that normally we calculate in months. In case of B, we calculated in days because the amount of drawing, guys, was in between. So for me, it becomes very difficult to calculate, in terms of months. So right. So whenever the dates is either 1st or 30th, if that is given, then it is always months, guys. But if the dates is coming somewhere in between, then calculate in number of days. So please make a point of this. And now, guys, let's do this same question in the average due date method. So guys, in the average due date method, what is my first column going to be? Can I say here date of transaction is not given, guys? So can I say the date of transaction is equal to due date? Normally, if bills is given, I put bills, date of bill column, terms, then calculate the due date. Here, nothing, due date is, no due date is required. So can I say the transaction date itself is the due date? So can I take the transaction date itself as a due date? Due date, then guys, amount, then number of days from base date. And then finally, we have product. So heading will be, guys, calculation of average due date, taking dash as base date. We are ready to calculate the base date. Guys, here base date will be different for both the partners because this is not bilateral transaction. So it will be different. So 1st July. So I'll write the date here 2019. 1st July, 30th of September. 1st July, 30th of September. 1st November, 28th February. 1st November, 28th of February. And what is the amount, guys? 500, 800, 500, 800, 1,400. Tell me, guys, among these 4 due dates, which due date is the least?
1st July.
So can I take 1st July as a due date, guys? So come top, taking 1st July 2019 as the base date. So guys, from 1st July 2019 to 1st July 2019, can I say the number of days is 0? Now from 30th of September to 1st of July. No, so from base date 1st of July to 30th of September, guys, how many days? How many days? Please calculate and tell me. Yes, from 1st of July. So July has got total 31 days minus 1 plus 30. That's 31. 91 days, are you all getting?
Yes, sir.
Next, guys, from base date 1st July to 1st November. So July has got totally 31 days. So 31 minus 1 plus 31 days of August plus 30 days of September plus 31 days of October and 1 day of November. So are you all getting 123 days?
Yes, sir.
Then guys, July total 31 days minus 1 days. So plus August, September, October, November, December, Jan, Feb. So 242 days, guys.
Yes, sir.
Calculate the product. So 800 into 91 m plus 1000 into 123 m plus 400 into 242 m plus MRC 2,92,600. What is the total of amount, guys? Total of amount
2,700.
2,700. So average due date, guys. What is average due date? Base date plus total of product divided by, or sum of product divided by sum of amount or total of amount. Base date is, guys, 1st of July plus 2,92,600 divided by 2,700. 2,92,600 divided by 2,700. So this 108.37, guys. 108.37. So can I say 109 days? Guys, here one thing I have to mention that institute at certain places, guys, they have done round up concept, in some places round off concept. So guys, in the average due date, we have to always take the round up. So please take the round up and do mention your assumption that 108 days has been round up. Mention it in the bracket, right? So guys, in certain questions they have done round up even though the point is below 5. Below wherever 0.5 was there, we saw 0.4, 0.3 was there. Still, they took round up at few questions, and some places they have done round off, guys. So this is something which is there with the institute always, so we cannot do much about it. So we'll stick on to our concept, which is always round up. So guys, from 1st July plus calculate 109 days, guys. That will be the average due date. Please calculate 109 days. So in July, 31 days are there. If I were minus 1 day, 30 days of July. 30 days of July gone. So 109 minus 30 is 79. Then 31 days of August is gone. So minus 31, it is 48. Then 30 days of September is gone. So 18th, guys, October 18th. October 18th. In the textbook, it will be 17th of September, October, but it's okay. We'll do 18th October. They have done round off. That's why they're getting October 17. We did round up. That's why we're getting October 18. So guys, now if the partner, whatever the money is withdrawn, if he's settling it on 18th October, he don't have to pay any interest to the firm. But obviously he'll not pay it on 18th October because withdrawal is gone till March. So guys, we have to calculate interest. So now interest will calculate from 18th October, guys, because up to 18th of October, there is no interest as per average due date concept. Because on 18th of October, this is that date. If the payment is made, neither interest gain or loss to partners, neither interest gain or loss to the firm. So 18th day, no interest. So we want to calculate interest, guys. The question says calculate interest. So we'll calculate interest for the days from 18th October to 31st of March. Calculation of interest on drawing for partner A from 18th October 2019 to 30th, so 31st of March, sorry, 31st of March 2020. So guys, please tell me what is the amount of drawing. So interest on drawing is equal to amount of drawing into 6 by 100 into what is the number of days, guys? From 18th October to 31st March 2020. So October totally 31 days, right? 31 minus 18. So 13 days of October, 30 days of November, 31 days of December, 31 days of January, 28 days of February, 31 days of March. So are you all getting 164 days, guys?
Yes, sir.
So we need to calculate this for 164 days. What is the amount of drawing? 2,700 into 6 by 100 will give me the interest for the entire year. But we have not used this money for the entire year. We have used this money only for 164 days divided by 365. What is the interest you're getting? 2,700 into 6% into 164 divided by 365. 72.79. 72.79, guys. We can round off. Guys, average due date has to be round up, but amount always round off. 72.79, guys. Can I make it 73? What is the interest that you got as per this also? Same year, 73.9. Round up to 74. Right? So almost this difference of 1 rupee will come because of approximation. So you can ignore the difference, guys, not a problem. So 73. 73 is the interest. 73 is the interest, guys. Is it okay, all of you?
Yes, sir.
Are you able to follow what we did? So guys, first, what are we supposed to do? Calculate the average due date. Normally, as we calculate the average due date, just calculate the average due date. Once you get the average due date, if you want to calculate interest from the average due date till the end of the year, for that many days, you have to calculate the interest. Guys, okay, not okay? Please do it for partner B by yourself and tell me if you're getting it or not. First, you have to calculate the average due date for the partner B and then the interest. So 3 minutes of time, guys, to complete this. Please calculate the average due date for. This is calculation of average due date for partner A. You have to calculate the average due date now for partner B, guys. Same way. And then the interest. Adi, Akshita, Bhavika, Lakshana started working.
Yes.
Yes, sir.
Yes, sir.
Manish, Nandini, Pratiksha, Priyanka working.
Yes, sir.
Yes, sir.
Yes,
Raghav,
sir.
Shruti, Roshni, Sundari, Shweta, Sanjeev working.
Yes,
Yes, sir.
Yes, sir.
Yes, sir.
Okay. What is the base date you have taken for B?
12th June, sir.
Perfect. As per our concept, guys, you'll get 132 days. Am I correct? And your average due date will be 22nd of October. And this will be 160.
Completed, sir.
Superb. So guys, as per the average due date also, we got interest 73.64. And as per the normal method also, we got 73.9, guys. So 73.64, if you round off, it will come to 74. And even 73.9, if you round off, we'll get 74. So they've given that the difference in the amounts in the two systems, that is first system is the ordinary system and second is the average due date, is due to approximation, because we do approximate calculation. So points there could be difference. It is unavoidable. All those who have done with illustration 11, please head towards illustration 12, guys. Illustration 12 also, they have not mentioned the requirement, but it is calculation of average due date. So please start working the 12th illustration, guys. Anybody still doing illustration 11? Adi, Akshita, Bhavika, Lakshana, Manish, anybody still doing illustration 11?
No, sir. Completed. No, sir.
All completed?
No, sir. Yes, sir.
Okay, guys, head towards illustration 12. A partner in a firm has drawn the following amounts for the half year ended 31st March 2020. They've given the date of drawing and the amount of drawing and assume February as 28 days. Now here they've not mentioned what are we supposed to calculate. So since we're doing average due date chapter, we have to calculate average due date only. Sir, in exam, will they ask this kind of questions? Hopefully they should not ask. I've never seen this kind of questions in exam, so don't worry, they'll not ask you. They'll mention what you have to calculate. So guys, please calculate the average due date. Due date column, guys, this is my date of transaction and there's no way to calculate my due date. So this will be my due date. So this is the due date column. Then we have amount column and then you'll have number of days from the base date, guys. What will be the base date? Can I say this is the least date? So keeping 9th September as the base date, guys, you need to calculate the number of days and product and just apply the formula, guys. You'll get the average due date. The only answer that they want is what is the average due date? What is the average due date here? They've not even calculated interest also. They've not asked interest also. Such an easy question. Or guys, do you want to take this as homework?
We'll do it quickly, sir.
Okay, guys, do it quickly, no problem.
So,
Yes, boss.
so question make amount पर answer में लोग कुछ अलग amount place sir.
So now which amount?
Like 9,000 they have taken 900, 10,000, 1,000.
I think that is a mistake that has happened.
Okay, sir.
That is a mistake that they've missed out the zero for all the transactions. So then assume the amount is 900, 1,000, 1,100. Do that way. We'll do that way.
Okay, sir.
Guys, please assume this amount is 10 less. So this will be 900. This is 1,000. This is 1,100. This is 1,200. This is 1,300, 1,400, and 1,500. Don't take these amounts. Because if we do that, it will be 87 lakh 86,000 rupees. So I think that is why they've reduced 10 in the answer. And if you see, this question itself is nonsense, man. They have not given any interest rate. They have not given what needs to be done most importantly. So anyways, we know the concept, guys, so we'll do it. Guys, once you've done this question, please go to exercise and take the first practical question, guys. First practical question of Mr. Yash and Mr. Harsh. All those who have completed this, you can go to the exercise. Done with this, guys? Guys, where have we reached?
Got the answer, sir.
Okay. Done, guys?
Yes, sir.
Yes, sir.
So let's head towards the exercise part, guys. I'll give that as homework. I'll just explain just one thing. So if you look at this question, guys, yeah. So practical question number one, Mr. Yash and Mr. Harsh are partners in the firm. They had drawn the following amounts from the firm during the year ended 31st March 2020. So if you see for Yash and Harsh together, they have clubbed and given the transactions together, guys. So what you have to do is you have to pick up separately for Yash, separately for Harsh. So these are the amounts for Yash. Okay. So guys, you have two options. So when you take Yash amount, so there are three transactions for Yash. You will prepare the tabular column for calculating the average due date. So whatever is the least due date for Yash, you will take that. So for Yash, this is the least due date, guys. And what is for Harsh? For Harsh, if you see there are three separate transactions, which is this, this, and this. So for Harsh, you may take this as the base date, right? So your answer, you will get your answers, guys. But in this solution, if you see the book back question, guys, if the book back solution, if you see, they have taken this as the base date even for Harsh. So in that case, still you'll get the answer, because whatever dates you get, guys, ultimately the system is designed in such a way that you will get the answers. So even if you take 1/5/2019 as a base date for both of them, still your answer will match. And even if you take for Harsh this as the base date, because for Harsh 15th August is the least due date. So that also if you take, it will 100% match. So what are they asking, guys? They're asking to calculate the average due date. And once you get the average due date, from the average due date till the end of the year, that is 31st March, you're supposed to calculate the interest, the way we have done the illustration 11. So can you manage this question as homework, or do you want to do it now and get clarified with your doubts? Anything? You can just go through the answer, guys. You can just go through the answer. Maybe roughly you can go through the answer and ask me if you have any doubts. Just go through roughly, guys. Don't do it. Just calculate it in your mind using the calculators also, and tell me if you have any doubts. For Yash and Harsh, in this question, guys, they've taken 1st May as the base date. You can take anything. You can take this as base date for Yash and this as base date for Harsh. It's up to you. Just ensure that you don't end up taking a date where your calculation goes in negative. Just avoid that part alone.
Sir,
Yes, boss.
sir, could you repeat again? So I couldn't hear.
Which one, Bhavika?
So the question itself, so I had some network issues.
No problem. So what I said is that, Bhavika, in this question, if you see here, they're asking us to calculate the amount of, average due date for Yash and Harsh, and they want to calculate the interest from the average due date till the end of the year. Now, if you remember, this is a similar question what we have done for illustration 11. So we calculated a surplus due date for one partner A, another average due date, columns for B. So same way here, you will do one set of tabular column for Yash, another set of tabular column for Harsh. For Yash, what due date will you take? Can I say Yash transaction? There are 3 transactions for Yash. Can I say this is a transaction for Yash? Bhavika, is she there? Bhavika, are you there? Okay, she's not here. Let her come back. Guys, others, do you have any problem in this?
No, sir.
Comfortable? So from the average due date to the end of the year, guys, for 277 days, you're supposed to calculate interest. Same way for Harsh also. His average due date is 12 December. So from 12 December to 31st March, that is for 109 days, you have to calculate interest. Are you all getting the same answer which is there in the textbook?
I got it, sir.
Oh, somebody called me. Guys, once you're done with this, let me know, guys. We'll be heading towards the last sum of this particular chapter, guys. Guys, others, all of you completed. Can we head forward?
Yes, sir.
Yes, sir.
Okay, guys. So this one additional question I've got it for you guys. This was asked in May 2020 RTP. So very interesting question, which is a little bit unique. So let's do this question, guys. It says that Kiran had accepted bills payable to Hina. Kiran had accepted bills payable to Hina, falling due on different dates. So the details of the bills are as follows. So on 9th April 2018, 3,000 rupees is the amount that is due. That is, date of bill is 9th April. So we have to calculate the due date. On due date, 3,000 is due. So likewise, the date of bill, amount, and the issuance of bill is given. Now, guys, on 1st July, it was agreed that these bills should be withdrawn. These bills should be withdrawn. On 1st of July, it was agreed that these bills should be withdrawn, and that Kiran should accept on that date, which means on 1st of July, on that day, 2 bills. One for 10,000 rupees due in 4 months. So one bill, guys, for 10,000 rupees, which is due in 4 months, and another bill for the balance along with the interest, and that bill is due for 6 months. Calculate the amount of the second bill, taking interest at the rate of 10% per annum. Take 365 days in a year for 2018 and 19, guys. So first, what will you do, guys? Normally, we'll calculate the average due date, guys. Then we'll do the adjustment what the question is asking us to do, guys. So can we calculate the average due date? calculation of average due date, guys. If you see date of bill, 2018, 9th April, 18th March, sorry, 18th April, 25th of May, 5th of June. Please note down the date of bill column, guys. Please note down. Okay, even I'll do it along with you. Don't worry. Let's do it, guys. Here it is, calculation of average due date, taking dash as base date. So let's see what is our base date going to be. Guys, the first column will be date of bill column, then term of bill, then we have due date, then we have amount, then we have number of days from base date, and then we have product. What is the date of the bill, guys? It is 9th April, so 2018. 9th April, 18th April, 18th April, 25th May, and 5th June. 25th May, 25th of May, and this 5th of June, right? Yeah, 5th of June, guys. And the term of bill is 4363. So 4363. Okay, and you can maybe you can put in months here, M here. M stands for months. Then you have amount is 3,000, 5,500, 3,000, 6,000. So 3,000, 5,500, 3,000, and 6,000, guys. Now let's calculate the due date, guys. 9th April, guys. 9th April. So can I say May, June, July, August, August 9, 10, 11, 12. Can I say 12th of August?
Yes, sir.
Next 18th of April, guys, means May, June, July. July 18th, 19, 20, 21. 21 of July.
Yes, sir.
Then guys, 25th of May, 6 months. So June, July, August, September, October, November, 25, 26, 27, 28. 28th of November. 28th of November. 5 June plus 3 months, guys. So July, August, September, September 5, 6, 7, 8. 8th of September. Please tell me, guys, among these dates, among the due dates, which is the least due date? Which is the least due date?
July 21.
July 21 is the least due date, guys. July 21 is the least due date. So this will be my base date. This will be my base date. So taking 21st of July, taking 21st of July as the base date. So guys, you have to calculate the number of days from the base date to the due date. So guys, July totally how many days? 31 days. So 31 minus 21, guys. So 10 days of July plus 12 days of August. So 22 days, guys. 22 days of first transaction. Here it will be 0. And then guys, July totally 31 days. 31 minus 21 is 10 days of July. And then 31 days of August, 30 days of September, 31 days of October, and 28 days of November. Guys, are you getting 130 days?
Yes, sir.
Then 10 days of July, 31 days of August, 30 days of 8 days of September. So 49 days. 49 days. Now guys, product 3,000 into 22 M plus 66,000 rupees. This will be 0. 3,000 into 130 M plus, which is 3,90,000 rupees, and 6,000 into 49 M plus, which is 2,94,000 rupees. MRC 7,50,000 rupees, guys. 7,50,000 rupees. And what is the total for the amounts, guys? 6 plus 6, 12, 12 plus 5, 17,500.
Yes, sir.
Yes, sir.
Okay, now guys, let's calculate the average due date. Average due date is equal to base date plus sum of or total of product divided by sum of amount. Guys, what is the base date? Can I say 21st of July? Plus sum of product is 7,50,000 rupees divided by 17,500. So please tell me, what are you getting?
42.8, sir.
42.8. Can we make it as 43? 43
Yes, sir.
days. Now please add the days and tell me, guys, what is the due date? 21st of July plus 43 days. Please add and tell me.
September.
October or September?
September.
2nd September. Guys, you have to be very careful with the due dates, guys, calculating, or else it's going to be very difficult. Such an easy question. Just if you go here and there, small mistake with your calculation, you're losing an entire 5 marks. This 5 mark is like alwa, guys. You can just lump, you can take it. Now, guys, what is the question saying? What is the question saying? Now, guys, the due date is 2nd September. Now, what is the question saying? On 1st of July, it was agreed that these bills should be withdrawn and Kiran should accept on that date, 2 bills, one for 10,000 that is due for 4 months and another for the balance along with interest, guys. But please tell me, what is the total of the amount, guys? Can I say 17,500? Yes, 17,500 is the amount that we are supposed to pay. Now, what they're telling is that they'll cancel the bills, whatever they've drawn so far. Instead of that, they will issue 2 bills. In first bill, guys, the amount will be 10,000 rupees. And in the second bill, guys, it will be balance, which is 7,500 plus interest, guys, plus interest. Right? So they're asking us to calculate the amount of the second bill, which means I can calculate the amount of second bill only if I can calculate interest. Now, how do we calculate interest, guys? What do you feel? How do we calculate interest? How do we calculate interest? So, guys, the first bill is the first and the 2 bills, guys. On 1st of July, the bills are cancelled. The old bills are cancelled. And on that date, 2 bills are issued, guys. So can I say, since 2 new bills are to be drawn, their due dates will be as follows. So what am I doing, guys? I'm trying to calculate the due date of the bill. So guys, the first bill is drawn on 1st of July. Guys, what are the questions saying? The question is saying that on that date, that is on 1st of July, the bills were cancelled. On that date, 2 bills are drawn. One bill is for 10,000 rupees, which is due for 4 months, which is due within 4 months. So 1st July plus 4 months. And second bill is also drawn on 1st July, guys, plus 6 months. I'm calculating the due date. On which the payment is actually going to happen. So guys, the first bill is drawn on 1st of July plus 4 months of date is given, guys. So 4 months means what? July plus 4 months. August, September, October, November. November 1st, 2, 3rd, 4th. 4th of November is the actual payment date for 10,000 rupees. Guys, please note down this point. Till this we have done, guys. Now, heading will be calculation of due date for new bill. This will be the heading. So for first bill, guys, the due date is 4th of November. And for the second bill, guys, it is drawn on the 1st of July 2018 plus 6 months, guys. So August, September, October, November, December, Jan 1st plus 3 days, 2nd, 3rd, and 4th. So 4th of Jan is the actual payment date for balance 7,500 plus interest. So I've calculated the due date, guys. Now, had you made the payment of 2nd of September, guys, on 2nd September, had you made the payment, no problem. No interest would have come. Average date is that due date, guys, where you make the payment in such a way that neither of the parties are losing or gaining by way of interest. But what happened? Are we paying on average due date, guys? Are we paying on 2nd September? No. We are paying one amount on 4th of November, another amount of 4th of January. So we need to calculate interest, guys. We need to calculate interest on the first bill. So guys, average due date is 2nd September. So from 2nd September to 4th November, guys, 4th November. How many days? Can I say 63 days? You made the payment 63 days after the due date. Guys, you made the payment 63 days after the due date. So for the 63 days, guys, don't you think that interest has to be paid on 10,000 rupees? Because for the first bill, guys, the amount that you're settling is 10,000. So 10,000 into 10 by 100 into 63 divided by 365. So the interest on the first bill is 172. The interest on the first bill is 172. Okay, not okay. Please calculate, guys. I'll wait. Don't worry. Please note down from here. Please note down from here. Heading will be calculation of due date for new bills. Since two new bills are to be drawn, their due dates shall be as follows. For the first bill, it will be 1st July 2018 plus 4 months, which is 4th November 2018. And for second bill, guys, for second bill, the due date is 1st July 2018 plus 6 months, which is 4th of Jan. 4th of Jan. So on 4th of November and 4th of Jan, the payment is made. The payment is not made on due date. Payment is not made on due date. Therefore, I need to calculate interest. Calculation of interest. Calculation of interest. So interest on the first bill, guys. Average due date is on 2nd September. Had you made the payment on 2nd September, there would not have been any interest component. But you did not make the payment on 2nd September. Instead, you chose to make a part payment on 4th of November. So from 2nd September to 4th of November, to the extent of 63 days, on the 10,000 rupees, guys, you need to calculate interest because the first bill amount is 10,000 rupees. So on 10,000 rupees, you need to calculate at the rate of 10% interest for 63 days. And you will land up to the interest amount of 172.6. Guys, till this, if you finish, let me know. I'll proceed forward.
Sir,
Yes, boss.
so can you explain it again, sir?
Very simple, Kana. So what are they telling is that if you look at the question, so the dates are date of bill is issued on different dates, right? And they said that, sir, we want to make the 17,500 entire payment on one date in such a way that neither Hina is gaining or losing any interest, nor Kiran is gaining or losing any interest. So that is why we calculated the average due date. Am I correct, Pratiksha?
Yes, sir.
So you arrived at an average due date of 2nd September. On 2nd September, had you made the payment, there would not have been any interest gained or lost by either of the parties. But what happened? What happened? Kiran had approached Hina and told that, Hina, please cancel the old bills. Instead of that, for the 17,500 rupees, please calculate another bill. On 1st of July, these bills were cancelled. Okay, and it was agreed that these bills should be withdrawn and that Kiran should accept on that date, that is on 1st of July, Kiran has to again accept two bills. One bill is for 10,000 rupees. Out of 17,500, one bill is for 10,000 rupees. And the bill is issued on 1st of July, Kana, plus 4 months of time period. So on this due date, this 10,000 is paid. And for the balance, Kana, what is balance? Can I say from 17,500 bill, 10,000 is paid in first bill. So can I say balance is 7,500?
Yes, sir.
And the other bill for the balance along with interest. So 7,500 plus interest. For this amount, there is a second bill. So now what is the question asking? Question is asking, what will be the amount of the second bill? When the second bill is accepted, what will be the amount? So that will be 7,500 plus interest. So that is what we are trying to calculate. We are trying to calculate interest. Why are we trying to calculate interest? Because on 2nd September, had you made the payment, no interest would have come, but you did not make the payment on second interest. So therefore, there will be an interest component on this amount and there will be an interest component on this amount. Do you agree?
Yes, sir.
So those two interest along with 7,500 will be the bill amount of the second bill. Will be the amount of second bill. So that is what we are trying to calculate. We are trying to calculate the interest of the first bill, which is 172.6. Now interest of the second bill. This is interest of the second bill. Can I say the second bill, the remaining amount is 7,500?
Yes, sir.
Had you made the payment on 2nd September, you would not have incurred any interest, but you made the payment on 4th of Jan. Kana second bill due date for payment is 4th of Jan. Just now we calculated. So from 2nd September to 4th of Jan, from 2nd September to 4th of Jan, there is a delay of how many days? Can I say 124 days? Please calculate and tell me. The 7,500 rupees you have paid in delay for 124 days from the average due date. So from 2nd September to 4th of Jan, guys, please calculate the number of days. September has got total 30 days. 30 minus 2. So 28 days of September, October plus 31, November 30, December 31, and Jan 4. So 124 delay. There's a delay of 124 days. So 7,500 into 10 by 100 into 124 divided by 365. If you do, you'll get the interest for the 7,500 rupees. Now, what is the amount of new bill? The amount of the first bill is 10,000, guys, which is given in the question. Now they have asked us to calculate the amount of the second bill. They've asked us to calculate the amount of the second bill. If you see the second bill, guys, second bill or total another. Total 17,500 is the total exposure, total liability. In that 10,000 is settled in the first bill. The remaining 7,500 plus the interest. This is the interest component. The interest of the first delay. This is the interest of the second payment delay. So this is the amount of the second bill, Gana. 7,924.39 is the total amount of the second bill which is drawn on the 1st of July. Anybody's got any problem with this?
Sir,
Yes, boss.
this 172.60, that is
That
for
is interest.
10,000, no, sir.
Upon 10,000, because this 10,000 rupees, did you settle it on the 2nd of September?
No, sir.
You paid on 4th of November. So how many days delay you paid?
63 days.
So on 10,000 rupees for 63 days, you have calculated this interest.
That we can't show it with 10,000 itself, sir.
The problem here is, if you look at the language of the question, they're telling that on 1st of July, we are going with the language of the question, Gana. On 1st of July, it was agreed that these bills should be withdrawn. Which bill? These 4 bills has to be withdrawn, cancelled. And that Kiran should accept on that date, which means on 1st of July, 2 bill. One is for 10,000 rupees due in 4 months. So first bill, what is the amount that they've taken, Gana?
10,000.
Question is telling only take 10,000. So that's why I'm not taking interest. Had the question told that take 10,000 rupees plus interest on 10,000 rupees, then what you're saying I would have done.
Okay, got it, sir.
And after that, see the language. And the other, that is the second bill for the balance. What is the balance? 7,500 with interest. With interest on 10,000 and interest on 7,500. Both the interest, they've asked me to add in the second bill.
Okay, sir.
And that due date is 6 months. Now, are you clear why are we doing this?
Yes, sir.
Now, guys, the same question you can expect in exam. They might twist the language. Now, as Shweta said, they could tell you that please include this 172 in the first bill. Then include this 172 in the first bill. Or they can say that include both of these interest in the first bill. The question can be asked anyway. So the solution, guys, you cannot buy out the solution. You're into CA course. So you have to go with the language of the question, guys. Whatever the language of the question says, according to that, we have to calculate. I'm telling you one more time. How can they twist this question? They can twist and tell that. Alternatively, they can tell that in the first bill, take 10,000 rupees plus interest on 10,000. This is one possibility. Plus in the second bill, pay the balance 7,500 plus interest on 7,500. This is one option. This is my second option, I would say. This is the second option. How could be the third option? The question will say that in the first bill, please take the amount 10,000 rupees plus the interest on 10,000 plus the interest on 7,500. And in the second bill, it would be the amount of 7,500. Anyway, they can ask it, guys. This is the third option. So be prepared, guys. We have to 100% understand the language of the question, and depending on that, we have to calculate the answer. What is the requirement of the question, guys? If you see the requirement of the question, calculate the amount of the second bill, because second bill, guys, you know the balance, but you don't know the interest. So how can you get the amount of second bill? Amount of second bill is 7,500 plus interest is equal to amount. So without calculating interest, you cannot get the amount. That is why you calculated interest. What is the requirement of this question? Calculate the amount of second bill. They have not even asked the average due date. They never asked average due date in the question. But without average due date, can you calculate the interest? No. So first you have to calculate the average due date. Then For the bills that were accepted, new bills that were accepted, you had to calculate their payment date and take the difference between the two. And for the delay in number of days, you have to calculate interest. What did you first do, guys? For me to calculate this interest, what is required? First, I need the average due date. That's what you did first. Then what did you do? For the new bills, you calculated the payment date. And then third, what did you do? You took the difference. You took difference between average due date and the payment date. And these were the number of days delay in payment. And for these number of days, on that amount of 10,000 and 7,500, you calculated the interest. Yes or no? So this question, guys, at least 2 to 3 times you have to do it by yourself so that you'll be comfortable with these kind of questions. Also, I've given you guys what are the other ways they can ask the same question, guys. Second and third option I've given to you. These are the ways in which they can ask you the second question and the third question. They can twist the question in this way. Anybody who's not understood what has happened here, they've asked us to calculate this amount, guys. This is the requirement of the question. This was the requirement of the question. 7,500, very well I can calculate without doing average due date, without doing any calculation. But they asked me the total amount of the second bill, which is nothing but the 7,500 plus the interest component. For me to calculate this interest component, first I had to calculate the average due date, then the payment due date, then take the difference, which is the delay number of days. On that number of days, I have to calculate the interest. So that is why how the question has been proceeded. Clear, not clear? I've shared this PDF with you in the group, guys. Just you have to make small correction, or else I'll make the correction and change, send again this. Here I've put first bill, interest on first bill. It is actually interest on second bill. And here also it should be amount of second bill. So this is the two corrections, guys, that you have to do. If you can do it, you can do it by yourself, or else I'll change and send it to you. Not a problem. Not a problem. This is interest of second bill, and this is amount of second bill. Calculation of payment due date. Guys, all of you comfortable, not comfortable with this?
Comfortable, sir.
Comfortable, sir.
Adi, Akshita, Bhavika, Lakshana, Nandini, Pratiksha, Priyanka, Raghav, Shruti, Roshni, Sundari, Sanjeev, comfortable, not comfortable?
Comfortable, sir.
So guys, with this we come to end of average due date. And yes, so if at all I come across any new question or a unique question, probably I will inform you. Maybe I'll record that and send it to you, or maybe I'll inform you. We can join the live session. But with this, you can technically assume that the average due date chapter is over, guys. So we'll be heading towards the next chapter, which is sale of goods, goods sent on sale of accrual basis, right? So guys, with this, we come to end of the average due date chapter. We'll be heading towards the next chapter in the next class. Until then, bye-bye. See you. Take care.
Thank you, sir.